Hello everyone. In this video, I'm going to show you how to use option put price to determine a stock's supporting price. For example, this MRO, Marathon Oil, and let's look at the options tab, and let's look at this week's expiration. So let's look at puts, and we can see that below the current price, $12.25, when we go further out of the money, the bid price is going to zero, which means nobody is buying. If the stock price is below, if the strike price is below $10.5, like this point, nobody is going to buy it because nobody thinks the stock is going down that much. Okay, so what I usually do is look at the price, look at the strike price, and multiply it by 10%, and say the strike price is 11. 10% is $1 around. So I'm going to find if the bid is also around $1. So this is 0.01 per share. So you have 100 shares, that would be $1. So $1, 11 strike price, 1 to 10, 1 to 11-ish ratio is where I think is a good indicator of the support line. In this example, it coincides with this obvious support line around $11. So what I would usually do is I'm going to draw a line here, and I'm going to add an alert slightly above that, create alert on Webull, very easy, so that when the price drops to that level, I'm confident to buy it. Okay. Another example, let's say Occidental Oil, another oil stock. Let's look at the put price again. Below $23, nobody is buying, right? So 24 is around here. 25, so you can see a sudden increase in a bid price from 24 to 25, meaning 25 is more likely people think it's going to drop down to, if possible. So when I look at the strike price, I multiply it by 10%, right? So $2.4, and this gives you, and this bid price $2, slightly below 2.4 here. So I would say the support line should be somewhere around 24, between 24 and 25, maybe 24.3 or something like that. And if you look at the chart, the support line people think should be somewhere around this point. Okay, should be somewhere around this point, and this coincides with this starting point, the starting green candlestick around May. Okay, so that would be possibly a good support line for this stock. Obviously, $25 is a bit high because the stock has been consolidating around this range, 25 to 27, for a very long time. It's likely it's going to break to the downside if the oil price drops. You know, $25 is pretty likely. That's why people are willing to pay $6, way more than 10% of the strike price, to purchase this put. Okay, so let's go down further. Let's see. I think the price point that I would want to step in is right around 24.6. Okay, you can set an alert at that point, so you can get some alerts. EPD, I think it's the same, although the charts are kind of different. It's another oil stock. Looking at it, it's very different, right? The same expiration date, the same put, strike price immediately goes to zero, even less than $1 below the current purchase price. Okay, 22, below 22, nobody is buying. That means 22 is a very, very strong support line. Okay, it's very unlikely to go below that. So do you set an alert here? Probably not, because nobody believes the stock will drop to that low. So you got to move up a little bit. Okay, this says 22.5, and immediately the bid price is $6. So you wouldn't go up to 22.5. You would go to maybe just 22.3. Okay, that's where you set the alert. Okay, And I think if the stock price drops below, say 24 or 22.4, around this gap here, that's a good price point for you to step in. Okay, that's all about this video. I hope that helps you.